today is Taco Tuesday.
One taco.
That's why I'm ordering burritos. Anyway, today is a very fun day for me because I don't know if all of you know, I am in a journey of trying to build the skills that we need for public speaking. I honestly had a rude awakening, a humbling, a sliced piece of pie when I realized that I'm very comfortable talking to people. I love making friends, love socializing, like meeting new clients, and I thought that translated to public speaking. Humbling beyond belief. So this is class number 3. So I'm thankful, I'm grateful that all of you are here. Thank you. I'm almost gonna cry. Anyway, and I'm gonna tell you some stories along the way. Just remember, if you see me pause a little bit, just go along and just pretend that you know what's going on, and then we'll get started. I want to introduce to you one of my sponsors. His name is Julian. He is a home inspector. This is somebody that you're going to need now more than ever. So you will hear why later on through the story, but I want him to say a few words and welcome him with lots of passion.
Welcome.
Thank you. Squeeze right by here. I came in the wrong way. Excuse me. Well, good morning, everybody.
Good morning.
Thank you for being here. I know, and thank you, Sylvia. Leo, thank you for all those who have ordered services from me. I've been in the business for over 15 years now. I'm a certified master inspector. I do residential and commercial property inspections. And, you know, when I got started, it's just been back in the REO run when it happened. You know, as you may know, some of you who have been here long enough, we saw that changes occurred and that things were shifting. So you really got to keep a pulse on the markets and stuff. But that's how I got into doing the property inspections. By doing clean outs, and all these gutted homes were all messed up. So they needed people in the industry. But that's how I came involved with doing property inspections. And I am the owner and operator. And Area Inspections has been operating in Southern California since 2010. And I'm also practicing my whole public speaking here, so which is good. It's challenging, but you know what? With a few little things, you get better at it, and it's more needed now, more so than ever in this type. So, and I just wanted to let you know that, you know, I've been inspecting for over 15 years in residential, commercial, as I said. Area Inspections mission, our company mission is to provide the highest quality of work on an inspection. And our mission is, or our pride and personal involvement in the work performed results in superior quality and services. This mindset is also directly reflected in our level of responsibility, professionalism, and competency. We succeed at this because of our integrity and our commitment to maintain a solid work ethic. In the industry, you know, you want to hire a good inspector who's knowledgeable, experienced, so that way they can find defects and finding areas in the home that are really hard to find sometimes from the normal average person. You do want to find somebody that's certified, somebody that is committed to the process and to understanding and to explaining and translating that to your clients. I don't know how important that is to your clients, and they want to understand without scaring them. Sometimes going through the process of doing a home inspection can be pretty scary. You know, you find mold, oh my God, mold, you know, or the foundation's busted, you know, or we got some issues that we don't want to disclose openly, you know, because then you're dealing with the sellers and what have you. But in the process of all of this, we as professionals, we help to translate that to you first and to the clients. So that way you are knowledgeable and you're armed with the information that you guys need in a timely manner. Some inspections can take over 5 hours sometimes, depending on the size and what age of the home it is. But we are able to provide that for you, to be your eyes and ears, and to be able to get those reports turned around. Sometimes it takes 24 to 48 hours, but we offer like 3 packages, basic package, and that one is pretty much like we call it, it's like a peace of mind package is what it is. So for like new properties or for first-time home buyers, and we know that some of these properties are much smaller, it's perfect for those that are on a budget. It covers essential foundation, roof, electrical, plumbing, and HVAC systems. And it gives you a clear picture of the property's major components. It's ideal for those with minimal updates. And then there's like a comprehensive checkup on a property. And this entails, it's more like a popular plan is what we do for that one. And that inspection is of major appliances, evaluation of the windows, doors, functionality of the systems, and security issues. And it's also involved with the attic and crawl space. It's pretty much a full inspection, but with but without all of the excessive meticulous parts that are needed on a maybe more bigger home, like a luxury property or something that has been deferred maintenance or something that has had a lot of remodeling done. Those packages, this is more like an ultimate inspection. And what this entails, it's pretty much everything. We use technology, which is infrared thermography, to help to find and assess a property when there's leaks. So we do like take the thermography camera, we can scan a room and find out where those moisture areas are at. I try to identify them and then also see if there's any water intrusion. And with those types of technology pieces, that helps you get a clear picture and understanding of what's going on and to prepare you with what to ask for any repairs in that case. And then we also offer what's called sewer scan. And sewer scan is basically a sewer line inspection where we stick a camera in the sewer line and we're able to tell you what deficiencies are in that sewer line. And I'll tell you, majority of the times, I want to say at least maybe 4 out of 5 times I do an inspection, there's going to be some kind of problem with the sewer line. So if you're working with the buyer, that is actually something that you can, if there's room for negotiating, hey, that's something to help your clients to get something going in the home, and then they have peace of mind going into the property, or at least to be aware of what those conditions are. Because later down the line, then you get that phone call and it's like, I got a backup, water's back coming out of my tub. And then, they were like, let's call the inspector, let's find out what's going on. So I always recommend to get that done because it just gives peace of mind to the clients. They know what's going on, especially for those hidden areas. If you're not working with somebody, we do offer that package and it's half off at the time of inspection. They can add it in if there's anything they find deficient with that system. And then we also offer what's called EnviroScan. EnviroScan, you can add that in. So let's say we find mold on the property, or there's an area that has some kind of fungi growth and we're just not knowing where or what. We offer a service where you can add it in at the time of inspection. And what we do is we'll set up the conditions in the property, extension of the original home inspection, which can be another hour on site. But what this entails is we take samples and we document everything on site. We give a full evaluation of the property and we put it in a report. We take samples and we send it to a lab. They test it, get you a report back so you can find out what's significant. Is there bad mold or is it good mold? And mold is really one of those areas where nobody wants to talk about it. Nobody wants to mention it. That's gonna kill the deal, but I've seen properties where what they do is they'll go in, we'll get the results back, get an assessment done, call a remediation company, or if the insurance from the sellers can take care of it, get a price estimate for that property. Find out how much it's gonna cost. That can be negotiated in the process and making sure that your clients have peace of mind going into that property. I've seen it happen done over and over again. And even when they have previous remediation done, if there's still a little leak somewhere, we can always take an air sample and just make sure that your clients are clear moving into that home. So we try to provide all that services for you and you can add it in. And this helps you guys be informed with the information you need in a timely manner. So I always tell people, if it's your home, if you're buying your own home, you want to know what's going on. And I've seen it over and over again throughout the years where folks, they'll buy a home and they'll hire me as a secondary to come and inspect it. And even on spec homes, brand new build homes that contractors just made, you'll find things that are backwards. It's like they installed the HVAC backwards. It's like, really? Like, whoa, you gotta be kidding me. So, it's always good to have those inspections done and to make sure you get them back in a timely manner to help your clients and to help you to move on with the process. and that way everything's recorded. And that's what we're here for. We're here to provide that service for you guys. And we are backed by hundreds of inspectors. We're through Internachi. And as a certified master inspector, we do our due diligence to make sure that you guys are on with those services. Okay.
Thank
And,
you.
yeah, thank you so much for having me. And I do have a giveaway today. So it's a giveaway if you guys want to give me your name, get a sticky. I have some stickies. So just give me a name on a piece of paper, notepad, and your phone number. And then that way I'll grab them and we'll do a little raffle, and I'll raffle off a service of the sewer scan. So you can give it to your clients. It's actually a $300 value. So that way I can at least offer that to you guys when your clients need an inspection done. You can say, hey, I got a coupon for you so we can get a free sewer scan for you. And that just adds value for all of your clients. So I'm always here to help answer any questions. There is a little, I have a little setup out there. So you can scan my business card. Feel free to scan it, text me your info, and I can send you more information. I can be a good resource of information for you guys. If you ever need any help or questions out in the field, don't hesitate to call me, get a hold of me. I'm here to serve you and to give you information you need. Nothing's too crazy that I haven't heard, so give me all the cheese mix.
Thank you. He has a setup outside in the hallway, so if you guys want to leave your number information with him, and then we'll do a quick little raffle. Thank you, Julia. You're awesome. Thank you so much. All right, guys. So let's see. This is you.
Oh, did you win the first one? Yeah. Right back.
Oh, that's right.
I want the
I
lights.
don't know if I'm gonna be this for you. Okay, you're welcome. All right, guys. So like I mentioned in the beginning, I am working towards this new skill of public speaking. It hasn't been easy, it's been humbling, but I'm still gonna do it anyway until I master it. So I will be open to any comments, any constructive criticism. I would really, really love that. So let's get started. I decided to sign up to give a class at least once a month. As some of you might know, some of you take maybe 2 weeks, 3 weeks to prepare for a class. I took maybe 2 weeks to gather, think about what is it that I'm gonna do today. I took tips from other people that are very good at public speaking. And one of the things that I was told is prepare yourself that day, make sure that everything is in order, your outfit is prepared, do what you need to do, make sure you eat a good breakfast. So I did all that. At least I thought I did. So I went to church on Sunday, I prayed, I feel good, all the ideas came to mind, everything is great. Monday comes, everything is there. I went over all my slideshow and everything looks good. So here comes the day of, which is this morning. I don't know if you know, a little OCD, you can't tell, but just a little bit. And one of the things that I do is I plan my outfits on the weekend for the entire week. I mean, the purse, the clothes, the top, the bottom, look at the weather. I know it's ridiculous, but anyway. And what am I gonna wear and why? My hair, okay, it's hair change day.
Oh my gosh.
It's a Virgo thing. If you're a Virgo, you would understand. As I mentioned before, that is Jennifer's favorite time of the year. Okay, so I went ahead and did that. I woke up this morning, woke up at 5, I did my prayers, I went for a walk, and my day is just perfect. I'm like, dear Lord, Virgo. Anyway, so I went ahead and got ready, jumped in the shower, getting ready, and the most scary thing happened to me while I was in the shower. I couldn't find my razor. Oh my gosh, I went into a panic. My daughter is at school. My dogs are not trained to get a razor for me. And then I didn't bring a towel either into the shower. So I am like, okay, do I go look while I'm running around naked and wet? I don't want to do that. So I said, okay, problem solved. I can do this. So I said, I'm going to have to change from a dress to pants. That's it. I mean, I'm gonna have to switch the days. I'm gonna have to switch from the outfit that I have planned for today to tomorrow's outfit.
Now we know you didn't change.
So I figure, how do we tie that in for today? When you think of anything hairy in the industry going on, there's always a way to fix it. And there's your class. Anyway, all right.
Hairy day.
If it's a hairy day, think of Sylvia's class. Not my hairy legs, just the class. All right. All right. So today we're talking about navigating buyers in the current market. Okay. So we all know rates are a little bit high, a little bit, and the NAR settlement. That seems to be dominating the conversation. Okay. So I'm going to give you my own perspective on how I would navigate through it if I was a real estate agent, and how does that qualify me to have some sort of insight as to have I been in that situation before or not. So we're gonna get through that. But today we're gonna start with the 3 basic things that us loan officers can talk to a client within 5 minutes and sort of get an idea, this is the program, yes, you qualify, we're moving forward. So we're gonna go through all that. All right. So first, thank you so much for being here. My name is Sylvia. I am a loan officer. I've been here with Champions Mortgage for 6 years. I started in the industry right out of the military. I served for 8 years, and actually in the military, I was also in finance. So finance numbers have always been my passion, so there you go. All right, so we talked about class, Harry, everything. Okay, got it. All right, so now we have, I would like to go around and ask everybody your name in the year that you got your license, because this is going to come in to play later on. So your name in the year that you got your real estate license. Let's start here.
Okay, wait. Everybody knows me, Elizabeth. I got my real estate license 2014.
Jennifer Lucero, 2014.
Arlene Torres, 2017.
Maggie Carrion, February 14, 2024.
Beautiful. Rama.
Rama, 2023, September 2nd, on Lala's birthday.
So Lala here, 2004, I believe. Gosh, it's been a while.
Last on my birthday.
Yeah.
Beautiful.
Maria Bishara, I got it October of last year.
Yay.
Welcome.
Sandra, and it was in 2015.
Beautiful.
Rebecca, and I don't have it yet, but I'm manifesting 2024.
Yay! Okay, next class, you'll have it, no problem. Go ahead, my dear. Your turn.
Tassie Carson, September 2023.
Beautiful. Good job.
Everybody remembers the dates.
Oh,
yes.
yes.
Details. It's, I have had my license for over 23 years.
Nice.
Okay, 23 years. Do you remember the year of?
Absolutely not.
Okay. Just for that, you get a cup. Leo.
Leo Alcazar, I don't know when I got my license, but I know I started selling real estate in 2005 without a license.
Oh. Nobody has ever done that. I mean, this is Rebecca.
Rebecca Siniega, 1st of January 2008.
Beautiful, wow.
Gabriela Gutierrez, March 2023.
And Edwin Munoz, 2006.
Let me see, you have everybody? All right, September 2018. That's when I got my license. Now, well, how does that play into effect? I will tell you in a little bit. All right, so first we're gonna start with, there are 3 types, and I'm gonna glance through this quickly. I'm not gonna give you a whole course that you're supposed to know and be able to know about all this other stuff, but just know a little bit of the language that us lenders use, so that when clients talk to you, you sort of have just the gist of the information that you need to pass it on to your clients. And I will tell you the don'ts that you shouldn't talk to your clients about, okay? So we have conventional, FHA, and non-QM. Does anybody know what non-QM stands for? Okay, now what does that mean?
12-month bank statements, anything other that's not concurring.
Very good. Non-QM means non-qualifying mortgage. What that means is that they don't qualify based on your Fannie Mae, Freddie Mac's conforming lending. Non-qualifying, you do not conform. So the way you're gonna remember this, who shops at Costco here? All right, now why do we shop at Costco? Wholesale, cheaper, you get bulk. Okay, that's your convention on your FHA. Now, if you don't feel like going to Costco because it's a long line and it's out of your way and You want convenience, and you go to Albertsons. Now, sure, the paper towels are a little bit more expensive, but you don't have to go all the way to Costco. That's your non-QM. That means I don't want to have to file my taxes and show how much I make. I don't want to have to pull all this other stuff. I'm just going to give the bare minimum. My rate is going to be higher, but I'm going to get approved. So always remember, one thing doesn't associate with the other. A lot of people want to do the bare minimum qualifying, but that means higher interest rate. And that's just the way it is. Okay? All right. So that's that. Okay, 3 main components to pre-qualify. Think of CIA. Anybody know what CIA stands for? Oh, very good. In lending terms.
Credit, income,
Assets.
Yes, actually, I just made it up. Credit, income, and assets, yes. So I'm trying to put things in there that will allow you to remember these little things. These 3 components.
Yes, next she's gonna put her.
Harry, CIA, okay, all right. Credit, income, and assets. These 3 things will determine where your client is going. Do they qualify, do they not, and what program? Credit, income, assets. We can't do one without the other, okay? There's your answer, credit, income, assets. Credit and FICO scores. Let's talk real quickly about that. This is how it's determined. The do's and don'ts, real quickly. The do's. Let's do with the don'ts first. When you're talking to a client, normally the first thing I say, I don't run their credit report, I just say, oh, you want to buy a house, that's great, or whatever. Do you have any idea what your FICO scores are? 90% of the time, if you have good credit, you know your FICO score. If you get, no, I really don't know, you're like, oh, 500. You know what I mean? So that's cue number 1. If they say, oh, I'm below 650, there are 2 reasons why your FICO scores are low. And I always ask this question. And I always tell them, there are 2 reasons. Number 1, you have past due credit. And number 2, you're maxed out. That's it. Now, which one is easier to fix, in your opinion?
The max out one.
No.
No.
Why? For this reason. People that max out their credit cards, it's a habit. And for you to tell them, oh, okay, well, you need to pay down your credit and you need to save this money. If they haven't been able to pay down their credit and they're gonna go from paying $1,500 rent to $4,000 mortgage, what's the likelihood of that's gonna happen? They live off credit. That is the toughest one to do. I've known that because I've been doing this for a long time. That doesn't mean you decline the client and say, okay, well, sorry, out of luck, go shave your legs. I mean, none of that. Just say, okay, understand that's what it is right now, okay? If they have bad credit, if they have 650 or whatever, the one thing I normally ask is, how long was it your past due accounts? And if they say, oh, it was like 10 years ago, I had a medical bill, or, oh, I didn't pay my AT&T. I mean, anything that has to do with a long time ago, you're golden. Easy to fix, no problem. If it's recent, then are you behind now? And that's obvious. If you can't make your 25, so that's something for you to kind of calculate in mind and just kind of have that in your mind. What's your FICO score? That tells you right away, where are we and can we do it? Rule of thumb, under 700, your FHA, above 700, conventional. That's the rule of thumb.
That's good to know.
Now, why is that? Anybody know? FHA is not FICO driven when it comes to mortgage insurance. You can have 590, you can have 800, you can have 750. FICO score, your mortgage insurance percentage is calculated exactly the same way, 0.55. If you are conventional is driven by FICO score. So the sweet spot is 700. If you're under 700, you can qualify for conventional, but your mortgage insurance is going to be a lot more than FHA. So why would you want to put them in conventional? Does that make sense?
Yes.
So when you ask, so there's the 2 things. Number 1, oh, it's really so how your FICO scores? The minute they don't know, you're like, oh, what? Okay, we're thinking non-QM or FHA. Okay, all right. So that's sort of, it's up there. There are several things you can do. The one thing you want to tell your clients, please don't go and apply for credit. Please don't say,
Don't buy a car.
I'm very happy that you're here to meet with me to buy a house. It's a great opportunity or whatever. The first thing I'm going to tell you, do not apply for credit. please meet with my lender and she will tell you the steps to follow to get you to where you need to be to qualify.
And don't co-sign for anybody.
Do not co-sign, do not apply for credit, do not do any of that. Yes, and we're gonna go into that in a little bit. Okay, any questions on that? No? Okay. The next one, income. If you think of if they are base salary or hourly, W-2s and pay stubs. That's it. No taxes. Dear Lord, please do not bring me taxes. Don't collect them, don't ask for them, don't show them to me because they don't give us the information that we need to qualify them. And there's a couple of reasons why. When you provide tax returns, it only gives you the combined gross earnings that all the people that are in that tax return earn. If you're working and you file taxes with your husband and your husband is no longer working, but he was working last year, your gross earnings on your tax returns are gonna say how much both of you made. But it doesn't tell me how much you made if you're qualified. Does that make sense? So no taxes, pay stubs, W-2s, only your base salary or hourly, okay? Ooh, where is he? Let me see if I can remember how to do this.
Justin.
Oh, there we go. Hey, okay. So here, when you get a pay stub, and I put 2 here, this kind of shows you a little bit of what I think I figured out. If you look at the one on the left, it says salary. You see this right here? $6,250, okay? $6,250. So there are 2 things you want to look at. Okay, so that's the first one, $6,250. You see that? And then you want to see the pay period. That tells you, I'm sorry, what?
You gotta block your name now. Anyways, go ahead.
No, I thought I did.
Last word is social on there somewhere.
Oh dear, oh God, okay, you guys, don't look at all that stuff.
597.
Anyways, go
Anyway,
ahead.
thank you, Leo. Okay, anyway, back to this, guys, all right. So this right here will tell you that this gentleman is on salary. And he gets paid twice a month. If you look at the pay period, it's from 1 to the 15th, so that tells you that he makes that twice a month. Is that simple enough?
Yes.
Okay, so you look at the day, pay period, and the salary. Okay, so let's go to the next one. This one tells you, did I cover this one? I did. Okay, go ahead.
See that?
Okay. This one, what you're looking at is hourly rate. You see what the rate is, hour $26.30, and then it says hours $39.80. Okay? When you're looking at a pay stub, the number one thing you want to look at is, are they working 40 hours? Why is that? Well, if you, your income varies, you know, I work 40 hours, but sometimes I work 36, but sometimes I work 18 or whatever, then the lender is gonna say, since you're varying, we need 2 years to calculate your income. Let's say last year you took 6 months off to go to Europe.
Have a baby or whatever.
So then we're gonna use 2 years of income. But if you didn't work half a year, but you're working full-time, they will use your full-time, 40 hours. Does that make sense? So when you see that, and you glance at that, normally I will say, you work 40 hours a week? Because I see that oh yeah, it's just that, that's why you left early, and then, okay, but you're full-time, so move on. So nothing more, you don't have to stress about it, but that's what I'm looking at when I see a pay stub. The first thing I do, I don't calculate, I just look at how many hours, the hourly, that's all I look at. That's just a quick little glance so that I know what questions to ask when I'm pre-qualifying. Okay. All right, any questions on that? Nope. All right, let's go to the next. Okay, the next one is income taxes. The only time you require income taxes is if you are self-employed or have rental income. That's it. If you're not self-employed, don't ask for taxes. If you don't have rental income, don't ask for taxes. That's it, as simple as that. Okay, so when you say, oh, are you full-time? Yes, okay, what about you? Okay, can I see your W-2s and your pay stubs? That's assuming that you're meeting with a client, you're like, let me take this to the lender so we can get started. You wanna help them, that's what you want. You don't have to. When I meet with your clients, normally I would ask for all this stuff and I like to meet them in person. That way I scan their stuff and I give the originals back to them. I don't like to have originals from clients, but some agents love to say, here, let me take your stuff and let me send it to my lender. That's fine. But if you do, at least you know what to get, okay? So what are you looking at when it comes to tax returns, okay? And I try to make it as simple as I could, okay? So this is your, oh, thank you. Let's look at this. Page 1, the only thing I'm looking at is this right here. The wage, that's what I want to know, how much was reported last year. That's it. Okay, that's when I glance. If they say, I am self-employed, then I'm looking for Schedule C, C as in cat. So go to the next page.
There you go.
And this is what I'm looking at,
Line 31.
the very last one. So make it so that I can see the whole page, please. Thank you, okay. So people are going to tell you, oh, I made almost 200,000. Well, that's fantastic, that's great. You're like, oh, good, can I see your taxes, please? This is the number you're looking at. If it says $500,000 and there's $5 here, we're using $5 to qualify.
I got a question.
Go ahead.
So say you may have $1 million and it says $5 on there.
Yes.
Can you use those tax returns for like a non-QM thing?
Non-QM doesn't use tax returns.
Oh.
Pretty cool. Yeah. Non-QM will use everything other than the ordinary. They will use assets to qualify you. They will use 3 months worth of your income, bank statements. They will use 12 months, 24 months. They will use P&L. They will use 1099s. They will use everything other than what your conventional loan would use. So when you're glancing at them because they insist, here, give us a todo de una vez, señora, just, okay, just get the taxes, just gonna glance at that. When you see that, then you know, okay, we need to work on them. Go ahead, Leslie.
So if we meet with clients and we're scanning, you only need those 2 pages?
Nope, we need all of them. All of them. The only reason why I'm showing this is because when I meet the client, within 5 minutes, I kind of know what my conversation is gonna be with the client. I'm not gonna start selling them on conventional when I know their FICO scores are 650. Well, I'm not gonna sell them on a conventional if I feel like my income is kind of low because FHA goes higher on a debt ratio. So then at that point, I'm thinking, okay, so we have lower income, we have lower FICOs, I'm thinking, so then I start talking FHA.
Are you gonna explain debt to income ratio?
Yes, I think so. Yeah. Okay. Well, maybe. I don't know if it's in the class.
We will
Maybe.
now.
Okay. I guess I am now. All right.
I can show you.
Stop getting it. That's okay, Leo. It's okay. Thank you for asking, Leo. Okay. Debt ratio. What is the debt ratio? Here's a tricky question. When you are salaried and with W-2 based up client, the lender qualifies you on gross earnings. Why? I don't know. I think it's wrong because that's not what you bring home. They tax you on everything. If you have a 401k, if you have, I don't know, child support, and you end up with $5, and they qualify you on your gross. But if you are self-employed, they qualify on your net. That's just what they do.
Could you repeat that again,
Sure.
please?
If you are paid up in W-2, okay, they qualify on your gross earning. So that means I make 100,000 a year, divided by 12, that's what they qualify me on. Not what I bring home, but what my check looks like, what my salary. But if you're self-employed, as most of you probably are, they qualify on your net, meaning after all your deductions, then they qualify on how much you're claiming that you made after you wrote off everything. Something to think about. So $5. So $5, yeah, so you'll be able to buy, I don't know, a taco. Okay, Taco Tuesday. Okay, all right, so debt ratios, real quickly, to touch on that. Thank you, Leo, that was a very good question. Okay, so here it is. And the plans, I have to start again, change my outfit, anyway. So, and shake, well, that's, well, I don't know, race right now, but whatever.
Can you say what debt ratio means? What is it?
Debt to income ratio. So what does that mean? That means what percentage of your income can go towards your new house payment and your bills. The lender is very strict on that. Okay? So, back-end ratio. Back-end ratio means house payment and your debts. That's your back-end ratio. My car payment, my credit cards. Front-end ratio means just your house payment and your debts, the percentage of that. FHA can go up to 56% back-end ratio. So if you make $10,000 a month, you can have $5,600 in car payment and house payment. And
That includes taxes, insurance, and everything, right?
it has to be PITI, and if it's in association, if there is one.
Eesh.
I know. If it's conventional, they're capped at 50. If you're coming in with 5%, 45, you're coming in with 3%. So this is just to show you that when you're talking to a client, how we're able to just ask a few questions. How much did you, what's your salary? Oh, well, mostly, but yeah, okay, don't worry. How much did you claim last year? And just kind of get an idea. My FICO score is how much you make, and that's it. Or, I self-employed, good, do you claim the taxes? Well, pues no todo. And you're like, oh, you must be a real estate agent. Man, did I say that out loud? Anyway, all right, any questions on this, guys? No, okay, let's go on to the next. If you claim rental income, then you're looking at Schedule E. Yes and no? Yes and
Excellent.
Extra.
I'm thinking elotes. Yes, okay, Schedule E. So the two things you want to look at, we need to make it a little smaller. Okay. Two things you want to look at, and there's a formula that we use, but just the basic stuff is how much are they claiming? So they're reported $63,735 for the year, and is this a plus or minus?
Plus.
And that's it. That's what you want to glance at. Not that you're going to do the income calculation there, whatever. But if I come to you and you say, oh yeah, I have another rental property and is it finance? Yes. What's your payment? Oh, it's about $2,000. Okay. You look at their taxes, 2,000 times 12, 25,000. Okay. And you see that they reported 12,000. You're like, oh, that's going to be a debt. That's going to hit your debt ratio. Those are the things that we glance real quickly. And then I say, let me work at the numbers. And that's when we start doing our magic. Where do I plug it in? Let me do the math here. Where can I pull money from? So on and so forth. Okay, any questions on that? So we have tax returns for self-employed, Schedule C, and for rental income, Schedule B.
I have a question.
Go ahead.
When you have rental income, how much of that can you use? Is there a percentage of that?
Only, that's a very good question. Only if it's future rental income. For example, you currently own a house right now, and you got married, and you have 10 children now, and you want to go from or one, and you want to buy a bigger house, and you're saying, I'm going to rent this house for $3,000. Then the lender's going to use 75% of that. But on this, they want what you claim, that's what they're going to give you. There are a lot of little rules when it comes to that. And there's some stuff that you can add, subtract, but I'm not going to go into detail. But those are the things that you want to glance at. 75% is the future. Okay, does that make sense?
Yeah.
All right, any questions so far?
No, good job.
Oh, thank you.
Remember, gross up, gross up. Go
Oh, you know what, I didn't have that. Oh, we have some roll here today. I'm not gonna tell them what my next class is.
Looking at it.
Thank you, Leo, thank you. Actually, it was his idea to have a class on this basic stuff. He did.
Yeah.
Yes.
We should be up here.
Anyway, I thank you, Leo. That's really good. Okay, has anybody heard that term grossing up?
Yes.
My non-lenders. Has anybody heard that term?
Yes.
What does that mean? Do you know what it means?
Leo.
No, I don't know what it means.
All right, well, I guess we'll never know. Okay, all right, here we go. There are some incomes that are non-taxed. Annuity, Social Security, sometimes not taxed, pensions, anything like that. Child support, alimony. So if my child support is 3,000, I get 3,000. I don't know. No, it is tax, right? Don't they tax for that?
Yeah,
I think so.
Fixed income.
So what the lender does, they say, since we qualify you on gross earnings, we're gonna increase it by 1 1/4, depending on which program. Usually it's 1 1/4 for FHA, or it's 1 1/4 for FHA, and then 1.15 for conventional, vice versa. I gotta look it up because they change it all the time. So for example, let's say you have, and this is one of the things that we try to figure out, where can I get more money because my debt ratios are so tight? Oh, let me gross up my child support. If they get, let's say, if they get $1,500 a month times 1.25, oops. How much is income? 1,500 times 1.25. So that means it's 1,875 I can use as income instead of 1,500. That's grossing up. So if you're not sure which program you're going, gross it up by 1.15. Not that you need to do that. That's something that we do. That's grossing up your income. And that's on income that is not taxed. That means they don't deduct money from it before you get it. That's what that is. Okay? Any questions on that? Good question, Leo. Thank you. Oh, Leo. Anyway, all right, here we go. Now we're gonna do assets. Remember, we talked about credit, income, now we're talking about assets. Assets, bank statement, 401k, stocks, you can use all that for down payment and closing costs, except cash. When we look at bank statements, the first thing I do, I see how much the deposit is, and then I glance through a couple pages and see if there are any large deposits, if they're cash. If they're cash, I can't use them.
Even if they're seasoned?
Can't use it. If it's been, see, here's the thing, that's a very good question. I'm gonna ask for 2 months bank statements. 2 months. So let's say you deposit cash
3 months.
January, it's not gonna show. It's gonna be there already. So we're gonna look at the deposits in the last 60 days. That is not a big cash amount. So if you're planning to meet a client and they're gonna buy a house now, and there's a big fat deposit of cash, you can't use it. There are ways to get around it. So what you normally would do is say, Mr. and Mrs., and they'll say, oh, pues tengo aquí dinero en el colchón, and you know, whatever they say. Please save it. Keep it, don't move it, don't deposit it, don't do anything, don't move it, don't borrow, nothing. Okay, now that we're moving forward in the process of helping you qualify for a home loan, do me a favor, please don't apply for any credit, please don't switch jobs, and please don't make it, no move money around.
And don't buy a car.
That's it.
Buy a car.
That's it. So that's the one thing you're gonna tell your clients. I tell them the same thing, and do they listen sometimes? No, sometimes they just do what they're gonna do. Okay,
Sylvia, can I mention something?
Yes,
on the
please.
stocks and stuff? So one thing that I want to bring awareness for the 401k statement, it's very important that we ask that because it could be used as a reserve. A reserve makes our applicants stronger, like if they have 100,000 in reserves in 401k, the bank will use that as a reserve. And so sometimes we forget to ask or we don't, you know, but it's, you know, it's always good to find out so we can use it for reserves as a underwriter.
and, okay, so that's very good point, but that's normally assets, reserves are not required for conventional or FHA. They're required for rental purchase. So if you're gonna buy a rental property, they'll need to see reserves. For what you have for your house payment, if your house payment is $3,000, they need 6 months of that and 6 months on the new house you're gonna buy. That's when the reserves come in. Okay, any questions on that?
Nope.
All right, okay, so that's the most basic information that we normally go through. So when I meet a client within 5 minutes, do you have any idea what your FICO scores are? If they don't know, we know what that means.
Run.
Run. I know, just take off and go. Don't even say goodbye, don't even close the door.
No, we're saying not to us.
Number 2,
This is true.
more or less, do you know how much you make? What's your income like? Are you whatever? And then number 3, do you have money saved up for your down payment? If they say no, that's okay, because then there's down payment assistance. You know what I mean? But normally that gives me a very good idea as to which way I'm headed. Any questions, anybody? Okay, that covers that. Now, what does that have to do with the NAR settlement? What does any of this have to do with NAR settlement? Anybody know? Anybody have any idea?
No.
Any guesses? All right. When I got my real estate license back in 1998, I think it is. Is that what I said? I think that's-
2018.
No, 1998, that's when I got it, September 1998, I got it. That license gave us permission to sell real estate and do home loans. How many of you remember seeing all this in your real estate exam? You know what I mean? But how often do they say, make sure that the debt ratios and the income, it's real estate license does what it does. Helps you sell property, forms, this other stuff, right? 2008 hit. Who got their license before 2008? What happened? That license no longer allows me to do home loans. So we got a hit on what I was used to doing as a lender. All of a sudden, my license, I can't use it anymore to do loans. Imagine NAREP settlement says, this is great, whatever. So now you've been a realtor for 10, 15 years, your license, yeah, you can't sell homes. Now we're gonna create a whole new license that we're gonna make it extremely difficult for you to pass. And we're trying to figure out what the rules and regs are gonna be so you can sell real estate again. That's what a lender went through if you were in that.
And there was a rumor back in the day where you would need like a bachelor's at least to have a license.
Oh, there was so much, they didn't know where to start, they didn't know much about loan modifications, they were lost in the sauce. There was, I don't know what to do, yeah, you were there. It was ugly, it was a crisis, now what started all that, anybody have an idea? Jennifer, I'm sure you know, what started the 2008, what was the whole market crisis, the market crisis that we had in 2008?
The loans, yeah.
I'm guilty of that. I gave loans to gardeners.
Yeah.
You give loans to anybody with a heart.
On the CPA letter.
Yes, we had what was called subprime.
Subprime.
Those were the days.
I was a senior underwriter for subprime. So I knew all the rules to follow to qualify. Terrible program, terrible program. It had prepaid penalties, it had everything in the planet. So now when they created this, so then in 2008, after the major crisis, they decided it triggered a lot of the combination factors, collapse of the housing, subprime mortgage, risk-taking financial. So everybody was doing everything, but the last one they were thinking about is the consumer. Because we all benefit. The brokers did, the realtors did, because they were closed, and the loan officers, everybody benefited from everything that was going on except the consumer. So what did they do? They made us get a new license, and they put all kinds of disclosures. And for those of you that have taken the NMLS test, a lot of the questions are, how much jail time would you get if you did this? Is that not true, Sandra?
Yes, it's all about compliance.
Well, you have a license after you go to jail, no.
Well, it's a lot of part of the questions. Exactly. You can try to sell loans there, but give it to somebody that's still licensed. No. So they made those, and they came up with. So how many of you have had a escrow fall out at closing? And you're like, we're in escrow, we're going to close by this date, and it doesn't close. How many of you? Raise your hand.
I think I've had a couple. Yeah.
That's okay. How many of you? Would you say out of those that closed had to do with the lender, or was that the seller? Was that the situation?
Situation.
Okay.
Lender.
I'm gonna make a bet that I'm sure none of them were for Champions Mortgage. I'm just saying. So, and this is why they put these things in there. Because there were, back then, and it's embarrassing, but I wasn't a loan officer then, so whatever. I was actually approving the loans. Back then, I don't know if you heard of this, if you've been in real estate for a long time, you would hear loan officers say, your buyers would say, oh, well, how much do I have to come in at closing? And then they'll be like, oh, I'll tell you, when you come to signing, I will tell you. They would probably know the minute they meet with the notary. You show up and all of a sudden, we're short on funds. Because the buyer, they didn't have to disclose them, there was a good faith estimate, but it could change 50 times from the minute I approve you and gave you a loan for $500,000 and we said, yeah, you just need $20,000 in the bank. You go into closing, okay, now I need $45,000. If not, you're gonna lose your deposit. Oh, there was no prepaid? Yeah, now there's a prepaid. Oh wait, no, that's what happened.
Can I tell you a story real quick?
Yes, please tell us.
I used to sell loans, well, because you only need to have a real estate
Mm-hmm.
license. And I sold, because the market was going crazy, it was going up every year, it was like every 2 months it was going up crazy. So, and everyone was refinancing because the rate was dropping or they were pulling money out to buy more property,
Mhm.
right? That was the whole thing. And I sold this guy, I'm like, if you pay this, there's no prepayment penalty, and you can call me back in 2 months and we'll do it again, right? I swear. Okay, hold on,
So he's part of the market crash.
I'm like, yeah, for sure. And then the processor that was doing my loan, she added the prepayment penalty. So when he called me, it was in there because then they would get paid, the broker would get paid extra, and it was a shit show. It
Oh, it was terrible.
it was crazy. It was insane. And he called me, hey, da-da-da. I'm like, okay, and I'm like, it was her. She was doing it. I was like,
You could
everybody
add-
in the office.
You could add anything at the last minute and you
I swear,
wouldn't
it was
know.
crazy. It was crazy.
It was terrible. It
It was
was
ugly.
terrible. Yes. So anyway, so that's what this came up. So what happened to those of us that had a real estate license and we're doing loans and now we can't do that? Well, number one, I learned what happened, who got hurt, which is a consumer, and do I agree with that? Yes, I would never do anything to hurt somebody. Why? Because my parents got taken advantage when they bought their first house. And that's how I got in the industry. No, I don't want to do something. I don't want to help you buy a house that you can't afford. That's unethical. I'm not going to do that. So, number one, I learned, what do I need to do? What's my new job now? What forms do I need? Let me learn it, let me study it, and that way I'm bringing value to them. I'm well educated in the process now, and then you create a nice village. What does that mean? Make sure you team up with a good loan officer that will take care of your clients the way you do. Because the way I see it, when I pair up with an agent, I'm an extension of you. You're the face. If I do something wrong, they're gonna say, oh, Jennifer, oh, the lender, because they don't understand, we're two different entities, we work together, we're not, they don't know. They see you gave my name, and that means future referrals for you in the future. No, Jennifer, no. The loan that they gave me, they don't understand, oh, real estate loan officer. Number one, educate yourself on this type of forms. What do they want us to do? And if you're a good real estate agent, this is nothing. You're, okay, what do I need to do to disclose this? That's what we have to do. That's what the CD comes in for us for lending. Now I disclose something to you. Here are your fees. If I forget to add an appraisal, a prepaid penalty, a cost for real estate, and then I'm ready to close, I can't add anything more than what I disclosed to her. That's what it is. Very similar to real estate. You explain, you find a way, how do I explain it, how do I do that? And from what I understand, but agents are probably still gonna offer that compensation for the buyer, so you need to educate yourself and say, this is likely to happen, and if it doesn't go like this is the solution, this is how I'm gonna handle it, and they're gonna trust me. I have a good team, I have a good home inspector, I have a good lender, I have a good title person. We're gonna make this transaction smooth for our buyer. And that's it. Any questions on that? All right, real quickly. Anybody know the difference between an appraisal and a home inspection?
The appraiser is signed by the bank for the value of the home,
Correct?
and a home inspection is the condition of the home.
Okay, that's very good. That's the answer that we're looking for. Does the lender require a home inspection?
No.
They do only on ITIN programs. This is where having a good loan officer that is up to date with all the guidelines will come in and help you. Because if I tell you, hey Liz, we got your client approved for X, Y, and Z or whatever, by the way, these are the specifics, he's gonna need help on this. Make sure your home inspector is somebody that you can connect with, because if there's something that the bank didn't like, you need to be able to call Julia and say, hey Julia, I need to get this resolved. Do you have any? This is where a good home inspector comes in, if you happen to have him. And right now, we're getting a wave of ITIN product clients because they just approved a 3.5%. Okay, so something to think about. A lot of new stuff. Stuff on mortgages change very often. Stuff on real estate, not as often, because there's no need for some reason. But guidelines change all the time. And if we're not in there up to date. The one that gets hurt, your client, right? Okay, so how do we navigate through the buyers of this market? Think CIA, credit, income, and assets. Get buyers pre-approved with Champions Mortgage. Just a hint, if you don't have a lender, we're here. Expertise on mortgage requirements. Obviously, we have over 30 years of experience in our team here. In-house lender convenience. If you meet your client here, say, hey, by the way, I think my lender's downstairs. Let's do this. If we mess up, we can't hide because we're in here with you. So that is a big plus. I don't know if you've ever been in a situation where your lender stops answering. Well, if I don't answer, you can knock on my door. So, okay, so let me see. That's it. Thank you. That was me when I joined the military, and I was my 17 years old. Thank you. I was 17 years old.
Wow.
No, my hair was about here.
Wow. Look at you.
Yes. Anyway, so if you can do me a huge, thank you, my dear. If you can do me a huge favor, grab a piece of paper, and I left these here. And like I said, I'm working on building my public speaking, giving a class. I would love your input. The first one, I would like to know, graded from 1 through 5. Number 1, was this a snooze? You're like, oh dear Lord, I couldn't keep my eyes open. Like, I need some coffee. Or number 5, I learned something. Even if you learn one thing. You don't have to understand the whole class. I'm not gonna quiz you. You can put your name on it, but I know your writing list, whatever. Okay, the second thing would be, so number 1, you can put a number. Just 1 through 5. Guess what? She was useful. I like her pants. It's okay if she was not wearing a dress, whatever. We couldn't see the hair. Number 2, what's most important to you from a lender? I want to know, what's most important to you from a lender? And number 3, what content information is it useful to you? Because I need to be able to push out content. And if anything I say on social media helps you, I'm doing my job.
What is number 3?
Content information. What can I talk about? Either give a class, whether push out that you're like, I really would like to know. Oh, and one last thing, I don't want to interrupt you. We need to learn to change the conversation when we're talking to clients. In the last 30 days, and I was like, I think that's what it is, but let me put it to test. I visited many of my agents that have open houses, and I managed to meet clients. Not one asked me, what are today's rates? Not one. And I met probably a good 15 families. Not that I approved them all because like, oh, we're just looking at whatever. Not one asked me, what are today's rates? They all wanted to know, oh, so what's the payment for this house?
Mm-hmm.
And number 2, oh, no, we got it yet. So how much would if I want my payment around 3,000, what do I buy? Why is that important? Because a lot of these buyers were not buying 3 years ago, so they didn't see the 3%. We were there, so we have it in our heads. Well, if you were buying a house 3 years ago, you could have had a 4%. We put it in there. We need to stop doing that as agents. It's a conversation. That's what it is now. Okay, this is what your payment is. Just understand that, and don't quote interest rates to your buyers. Please don't. You can. First, you're not supposed to. By law. But let's say, oh, how much are the rates? Oh, I'm 6.5%, 7%. How does that translate to me as a lender? Imagine you send me a client, you say, so can you pre-qualify? I'm gonna say, sure, they wanna buy somewhere in Rialto. Okay, so I meet the client, I do the pre-qual, and I see that they qualify for $250. If I say, oh, $250, yeah, that's enough to buy in Rialto. Now you have to retrain them to think, yeah, they're really, well, somebody told me that I can buy something in Rialto for $250. That's what that translates to when people come into our office with interest rates. You know what I mean? Because rates change all the time. Sometimes they're steady, sometimes they're good or bad, but we know how to sell it because we explain to them programs and rates and how can you buy down and all this other stuff.
I just wanted to do food for thought because I was reading this book and it made it so much clearer. as a realtor, if they're asking for rates, you can say, well, would you like to know market rate or locked rate? Because locked rate, you can find out what your client was locked at before, and they'd say, it was locked at this, but based on, they had already gotten pre-qualified, they got all their documentation in with the lender, so you're okay. But regular rate, well, it could be between this and this and that. And they can understand the difference between a locked rate and a floating rate, because rates, like Sylvia says, they can change
Multiple times in a
during
day.
the day.
Mhm.
So when you say locked, they're like, oh, it was that. Well, yeah, that was my client, but they got pre-qualified through Champions Mortgage. All their documentation was in, and they were able to verify everything. So there's a big difference. You could talk about it like that so that they get now a little bit more knowledge. Oh, that makes sense. Because anybody can tell the client, yeah, you know what, the interest rate is at 7%. Can you believe it? No, it's not at 7%. Everybody has a different rate. It all depends on what's going on. So
That's a very, very good point. This is what I do when they ask me, oh yeah, do you think I can find something here in Upland for like 150,000?
no.
So what I say is, wow, that's a very good question. You know
Go
what?
ahead.
Well, depends. You want to live in it or outside of it? Just kidding. There's plenty of room under the bridge. Anyway, okay, come on, guys, stop it. This is terrible. Anyway, this is what I normally answer. I say, you know what's a very good question? As a loan officer, I'm not familiar with what's on the market right now for sale, but that's a question for your realtor. Thank God you have a very good agent, because Liz is very familiar with Upland and bubble.
It is the same as us. That's a good question for them.
You know what? That's a very good question. As
And
your
if I do
realtor,
remember your phone
I'm,
number, I'll get back to you. I
yes,
promise you.
yes. And you can just say exactly that. As a realtor, not, oh, it's not my job. No, I don't know. Don't ask.
No.
As your realtor,
Okay.
that's something that I think my lender can provide you all the details that you need. So why don't I put you in contact with her? That's it. Don't even say maybe around this time, because they get fixated on that amount, and then to retrain them, God help you. Anyway, hope this became useful to you guys. Thank you all for being here. We'll have some tacos outside.
Thank you,
I love you all. Thank you.
Thank you.